Act 1961. This is the act through which the basic income taxes are going to be levied, and the entire income tax is going to be governed by this Income Tax Act. Then Annual Finance Act, the income tax rules, circulars and notifications, the legal decisions relating to the income tax. Let's go one by one. In the sense, first one is going to be your Income Tax Act. Income Tax Act 1961. The levy of income tax in India is governed by this particular act called as Income Tax Act 1961. It is applicable to whole of India, and it came into effect, even though the act, name of the act is going to be 1961, it came into effect from 1st April 1962 onwards. Okay, and it contains section and subsections, clauses and subclauses. So when each part of the section is independent or of each other, and others is not related with the when each part of other such paras or such a part are called as clauses, and subsections on each on the other hand are going to be there, and it is something like this. There are going to be different sections. Take it this way. There are going to be a lot of sections independent of each other, not related to each other. Such parts are called as the clauses. Okay, and there will be subsections which are going to be a subclause of a particular section is going to be called as a subsection. So that is divided into so many number of parts. In a section may have a provision, provisos, and explanations on the provision. So the provisos to a section or subsection or a clause spells out the exceptions or conditions to the provision contained in the particular section or the subsection or whatever it is, or the clause or something like that. So the explanations and the provisions relating to the section are given in the proviso. So that is, the provisos spells out the causes where the provisions contained contained in the respect. Say for example, section 2, section 4, section 8, something like that. The separate section will be given out, and subsections will also be given out, and within that section the explanation on each one of the categorization or the tax component will be explained out in a very detailed manner. And the Income Tax Act 1961 undergoes change every year. Okay, while every year with additions and deletions or change, the substitution brought by the Annual Finance Act passed in the Parliament. Sometimes in the Income Tax Act 1961 is also amended through other legislations. So basically amendment will also take place, and then the Finance Act will also be prompting the Income Tax Act change every year. So generally in the parliamentary session, that is presenting the finance bill, that section of the finance bill will have provisions relating to the Income Tax Act. So the annual changes, generally the rates of income taxes will be changing, and some subclasses of income taxes will be changed out only through the Finance Act. So amendment in the Income Tax Act and annual changes in the Finance Act, both will constitute to the change in the Income Tax Act. Now the Finance Act, every year the Finance Minister of the Government of India introduces the Finance Bill in the parliamentary budget session, and when the Finance Bill is passed by both the houses of the Parliament and gets the assent of the President, it becomes the Finance Act. So amendments are made every year in the Income Tax Act 1961 and other tax laws by the Finance Act every year. So whatever changes that is happening on a year-on-year basis, all these things are because of the changes that is proposed in the Finance Act. The first schedule of the Finance Act contains the 4 parts which specifically which specify the rates of taxes. Part 1 of the first schedule to the Finance Act specifies the rates of taxes applicable for the current assessment year. Accordingly, Part 1 of the first schedule of the Finance Act 2022 or 2023 specifies the rates of taxes for the assessment year 2022-2023. Okay. Second part specifies the rates at which the tax deductible at sources for the current financial year. So the tax deducted at source. So the provisions related to that is going to be made out in the part 2. And then accordingly the part 2 of the first schedule to the Finance Act 2022 specifies the rates at which the taxes are deductible at source for the financial year. Part 3 gives the rates for calculating the income tax for deduction, for deducting the taxes from the income chargeable under the income tax, different heads of salaries basically, and computation of advanced taxes for the financial year 2022-2023. Part 4 gives the rules and regulations for computing the net agricultural income. So that way the Finance Act is going to be presented out. Income tax rules. The administration of direct taxes is looked after by the Central Board of Direct Taxes, CBDT. Okay. Now this CBDT is empowered to make rules for carrying out the purposes of the Act. So they are the persons who are empowered to make the rules. For the proper administration of the Income Tax Act 1961, the CBDT frames the rules from time to time, and these rules are collectively called as the Income Tax Rules 1962. But that will also be keeping on changing year after year. The rules also have sub-rules, provisos, explanations, as we were talking about in the Income Tax Act. Income tax rules will also be having provisos, subsections, sections, explanations, and so. And it is important to keep in mind that along with the Income Tax Act 1961, these income tax rules should also be studied. So these two things go in tandem, right? The Income Tax Act and Income Tax rules goes in tandem. So both these things have to be studied across. Both these things have to be learnt across to learn the subject on income tax. And there will be some circulars and notifications. Circulars are issued by CBDT from time to time to deal with the certain specific problems and to clarify doubts regarding the scope and meaning of certain provisions in the Act. Circulars are issued for guidance and that is going to be the official document, and it is applicable for both officers and for the assessees for a particular period of time. And the department is bound by the circular. Department of Income Tax is bound by the circular, while such circulars are not binding on the assessee. They can take advantage of beneficial circulars. So assessee, every income tax rules and regulations are kept. Have been developed by keeping in mind the assessee into consideration. Whichever is beneficial to the assessee, that can be opted by the assessee. So that way, that's going to be the advantage that the assessee has got. But then the rules and regulations have to be strictly followed by the whatever has been given in the circular, it has to be followed by the officers of the department. And the notifications are issued by the CBDT to give effect to the provisions of the Act, and the CBDT also empowered to make and amend the rules for the purpose of collecting or making the whole process of levy and collection a bit easy. The notifications are made out by the CBDT at their will. And there are a lot of case laws available as far as the legal decisions are concerned. The case laws refers to the decisions given by the court. In case if there is going to be any kind of discrepancy between the CBDT and the assessee, the department and things like that, it may be taken to the court of law, and the judges in the court of law would have dealt that particular case and given their judgment. The study of these case laws is going to be an important and unavoidable part of the study of the income tax law. It is not possible to for the Parliament to conceive and provide all the possible issues that's going to be there in the implementation of any act. Hence, the judiciary will hear the particular disputes and between the assessee and the department and the authorities, and they give the decisions on their various issues. So that forms the basis. The Supreme Court is going to be the apex court for the country, and the law laid down by the Supreme Court is going to be the law of the land. So the decision given by the various High Court, Supreme Court will all apply to the respective states in which such High Courts have jurisdiction. So finally, in case of disputes and things like that, the judgments that is given by the court, that forms the basis for the further cases. Okay, so these are all going to be the most important components of your income tax law. And income tax is a tax levied on the total income of the previous year of every person. So now we are actually getting into the Income Tax Act. So what is income tax? Now, income tax is a tax levied on it is levied on the total income of a person who have earned during the previous year. So section 4 of the Income Tax Act will is dealing with that, and it says the provisions relating to the total income. So the person, when I mean a person in Income Tax Act, it's not the individual alone. It includes all individuals, Hindu undivided family, association of persons, body of individuals, a firm, a company, and so on. So, whoever is an artificial person in the eyes of the law, they are going to be treated as person. Total income and tax payable. how it has to be looked in that is that income tax is levied on the assessee's total income. Total income constitutes all 5 classifications of income that we are going to deal about in the near future. So such total income has to be computed as per the provisions contained in the Income Tax Act 1961. So Income Tax Act has defined the total income, how to arrive at the total income. They have given the provisions relating to that. So according to the provisions given in the Act, the total income has to be computed, and accordingly, upon the total income, the total tax payability will also be defined.